Okay, so today we're going to deep dive into what's happening in the Singapore market.
All right, sounds good.
We've got 4 companies. We're going to look at Jardine Cycle and Carriage,
Okay.
StarHub, First Resources, and Japan Foods.
Yeah, those are some interesting picks covering a pretty diverse range of industries there.
Exactly. I mean, we've got everything from, vehicles and palm oil all the way to telecom and, of course, food.
Yeah. And by looking at how these different companies are doing, it can give us a good idea of the overall health of the Singapore market,
Sure.
Plus, we can spot some of those broader economic trends that are happening.
Right, yeah.
So it's like getting a little snapshot of what's going on, both locally and globally.
Exactly. Okay, so let's start with Jardine Cycle and Carriage.
Okay.
Their earnings report just came out, and it looks like they had a slight dip for the first 9 months of the year.
Oh, really? Interesting.
Yeah, but the thing is, it doesn't seem like it's because of, poor performance.
Oh,
It seems like it's mostly because of currency exchange rates.
so external factors affecting their bottom line.
Yeah, exactly.
So even though their businesses in like Indonesia and Vietnam are doing really well, those currency swings, they could become a problem in the long run.
Yeah, for sure.
Especially if you're interested in seeing how, those international markets can impact companies here.
Right, and it makes you wonder, like, did investors kind of see this coming? Because their stock price actually dipped a bit before the earnings news even came out.
Yeah, it's possible, those savvy investors are always trying to stay ahead of the curve.
Yeah, especially when you're dealing with the global economy and there's always, that currency risk.
Exactly. It's something to always keep in mind.
Okay, so let's move on to StarHub.
All right.
They just announced that their net profit jumped up like over 11% for the third quarter.
Wow, that's great news.
Yeah, it is. But what's interesting is that this happened even though their overall revenue went down a little.
So they're managing their finances? Yeah, it sounds like.
Yeah, it seems like they're being pretty strategic, which could be a really good sign for them, in the long term.
Right, makes sense.
But their share price also dipped a bit before the announcement.
Oh, really? So maybe investors aren't seeing the full picture here.
Yeah, I mean, do you think maybe they're missing some of those strategic decisions that StarHub is making?
Possibly. Sometimes the market, kind of reacts emotionally to those big headline numbers without looking deeper.
Right.
So like with StarHub, that dip in revenue was partly because of how they're recognizing revenue from their cybersecurity services now.
Okay.
So that could actually be a good thing.
Interesting.
Yeah. So it just goes to show, they're adapting to a changing market.
Yeah, for sure. Okay, let's move on to First Resources.
Okay.
Now, this is a company that seems to be doing really well.
Oh, yeah.
Yeah. Their net profit for the third quarter jumped up by almost 20%, like 19.3%.
Whoa, that's impressive. What's driving that?
Well, a big part of it is the rising price of palm oil globally.
Ah, so they're benefiting from that commodity boom.
Yeah, exactly. And it just shows you how much those global commodity prices can really impact a company, especially in an industry like this.
Right, for sure.
But here's another example of their stock dipping before the announcement.
Huh. So even with that great news.
Yeah. I mean, do you think the market's just being really cautious? Or maybe they already factored in the good news?
It's hard to say for sure.
Yeah.
But it definitely shows you how complicated the relationship is, between how a company is actually doing and how investors feel about it.
Right. And sometimes, good news just isn't enough to actually move a stock.
Especially if it's already priced in right.
Exactly. Okay. Last but not least, we have Japan Foods.
All right.
Now, unfortunately, they're facing some challenges.
Please go on.
Well, their latest report showed a net loss of over $1.5 million Singapore dollars.
Oh, wow. So for the first half of the year.
Yeah.
Okay. And what do you think is causing this?
Well, a big factor seems to be that their operating expenses went up by 10%.
Yeah. That's a pretty significant increase.
Yeah. And, a lot the businesses are dealing with this right now, like rising energy costs, supply chain problems. It's tough out there.
Definitely a challenging environment.
So the question is, can Japan Foods adapt, quickly enough?
Right. Can they keep up with all these changes?
Exactly. And their stock price stayed pretty flat before the announcement. So it seems like investors are kind of waiting to see what happens.
Yeah, like a wait-and-see approach. Makes sense.
Yeah. I mean, they're in a really competitive market, so, they're really going to have to control costs and be innovative to succeed.
For sure. Absolutely.
So there you have it. 4 different companies, 4 very different situations, but all connected to what's going on in the Singapore market.
Yeah. And by looking at these individual stories, you can really start to understand the bigger economic trends.
Yeah, absolutely. And it just goes to show that business is always changing, you know?
Always evolving.
Yeah, it's never static and it's always adapting to new challenges and new opportunities.
Exactly.
Yeah.
So keep learning, keep exploring, and, stay curious about what's happening around you.
Couldn't have said it better myself.
Okay.
All right, that's it for our deep dive today.
See ya next time.
Take care.
Bye.